Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Friday. Welcome back to another episode of the Tech Behind FinTech. I am your host, Anandio Swagu. Joining me is my esteemed guest today, Wilfred Daye, CEO of Chain Security. How are you today, Wilfred?
Very good. Happy Friday.
Happy Friday. So before we get into it, let's just do some housekeeping. We are streaming live from LinkedIn and YouTube today. We also have a live stream going from Instagram. So when I look that way, I'm to my Instagram folks. If you have any questions, please hop in the comments and ask them. Today's topic, the Bitcoin Treasury Playbook, corporate finance meets crypto. So our goal is to go through this from A to Z to help you get a better understanding of what's going on and how corporations are leveraging Bitcoin. So on that note, let me formally introduce my guest, and then we'll get into today's topic. Wilfred Daye is a financial executive with 25 years of experience of leadership at the intersection of Wall Street and digital innovation. As Chief Security Officer of Mercurity FinTech, MFH, he drives global expansion and digital asset adoption. As CEO of Chain Security, an MFH subsidiary, he leads investment banking and capital formation. He is also co-founder and CEO of Samara Alpha Management, a crypto hedge fund. Previously, he was CEO of Securitize Capital, pioneering private equity tokenization for KKR and Hamilton Lane, and held leadership roles in Enigma Securities, OKCoin Securities, and OKCoin. Earlier, he worked in structured credit at UBS, Barclays. Mr. Daye holds FINRA Series 7, 63, 79, and 24 licenses. Impressive, man.
I feel old, dude.
Why does that make you feel old, man?
25 years, man. It's it's great to be here. By the way, this is a very, very exciting area, very, very interesting topic since the Trump administration. So it's really a convergence of the cryptocurrency world and corporate world. So you're spot on that. One small announcement I want to make is that Mercurity FinTech used to be now rebranded to Chain's Digital Holding as of yesterday. So we made that announcement, or day before yesterday, we made that announcement very recently. And then I serve as the Chief Strategy Officer and a member of the board for the PepCo.
Okay, so all right, so for Chain's Security, it's now rebranded. You said you serve as the Chief Strategy Officer or the CEO?
Right, Chief Strategy Officer. Yes.
Chief Strategy Officer. Okay, no, thanks for that. Thanks for that correction. All right, man, let's get into it. Listen, your background is traditional finance, outside of security. What led you to the journey to get from traditional finance into the forefront of tokenized capital markets?
Yeah, my journey was just kind of accidental, to be frank. I didn't read the Bitcoin paper and suddenly have an epiphany and get into cryptocurrency and Bitcoin. I actually, we call this Basel III refugees from the investment banking world. So in 2016, there's a worldwide implementation of Basel 2.0 and 3.0. That gave us a significant burden to front office traders and bankers and so on and so forth, making transactions very difficult to do because of the capital requirement on the banks themselves. So this is 2016, 2017. That's where I transitioned into a fintech, and I accidentally, stumbled upon a company called Noble Bank. So Noble Bank turned out to be the first crypto bank in the United States. We were the bank behind Tether back in 2017. Then got into the stablecoin very early on. So that's how I got into the cryptocurrency industry. So really from traditional infrastructure perspective and just by accident.
For those who are not familiar, we, looking over your bio, we share similar companies intersections. I was at UBS and Barclays, but more on the straight technology side.
Right.
For those who are not familiar, can you describe what Basel 2 and 3?
Yeah, so Basel is the international banking regulation, so it requires the banks hold a certain amount of equity on their balance sheet. So there are two sets of banks. One is called a full reserve bank. One is fractional bank. Most of the banks, large banks like JP Morgan, Chase, Citibank, Barclays Capital, those are fractional reserve banks. They hold a certain amount of capital. The capital they hold typically, let's say 12%, 15%, and so on and so forth, versus the assets they have. Because of due to the financial crisis in 2008, 2009. There's a sort of a acceleration of the Basel development. Basel 2.0 is more about very straightforward bank regulation. Then as the products and services become more complicated over time, then the Basel 2 and Basel 3. So Basel 3 requires the bank hold additional capital on top of say 12.5%. And makes it really we call this return on attributable equity much harder to achieve from office perspective, because you're holding a lot more equity or dollars on your balance sheet, and you cannot redeploy the dollars to generate more money, right? So think about it: you have $1 in a bank, $1 in a bank can generate $3 of value, or through fractional reserve and so on and so forth. Now it can only apply to $1, so 1-to-1. So there's no leverage from bank balance sheet perspective. So that's really the Basel about real banking regulation. In theory, it makes the bank safer, but also from an operator's perspective, banking operator's perspective, makes the return much harder to achieve.
Thanks for that. And I know we just threw out tokenized capital markets, and I want to just go over that. Like, I want to set a baseline before we go on. And, so if you can give the audience an idea of what this tokenized, like real world assets, what does that mean?
Yeah. So real world tokenization it's been around for decades. The first example of tokenized asset is actually stablecoin, right? If you think about either being Tether or Circle stablecoin or Gemini stablecoin and so on and so forth, what they're doing is basically taking a dollar, holding a dollar on their balance sheet, and they issue a token corresponding to a dollar. So there's a one-to-one backing for the stablecoin. So stablecoins, by definition, the largest, in my mind, the largest real world asset tokenization, products out there. So the Tether right now is about 160 billion. And then Circle is somewhere between like 45, 50 billion. So those are the assets that already exist for a fair amount of time in the cryptocurrency space. So that's one example, big, obvious example of RWA.
So, and just for the audience, right? So it's taking a real world asset. In that case, it's a dollar, and then you're equating it to something digital like a stable coin. And that could obviously work for any type of asset, whether it's coins, real estate, art, or whatever, but it's getting that equation right. Is that accurate?
Correct. Yeah. Correct. Yes, absolutely. So that's the after tokenization. Yes. Mm-hmm.
So, what were some of the principles that you took from traditional banking over into this digital finance world?
Oh, a lot. I think it's obviously the cryptocurrency world as a fintech, from a fintech perspective, built up on traditional assets. Going back to our example again on the stablecoin side, so obviously the foreign exchange, how the foreign exchange work in the market. Whenever you travel to U.S. Back and forth between London and U.S., there's a currency exchange, right? There's also you have to pay merchandise with the local currency. That also involves foreign exchange. In the case of stablecoin, is really you abstract that set of activity on blockchain, and enables the settlement much quicker than traditional foreign exchange. So you do need to have some basic understanding of how the traditional world work. And then one you go a little bit deeper from the bank regulation perspective. Obviously, if there is a risk associated with settlement, like hard style risk and so on and so forth, to a certain degree, stablecoin eliminate or minimize, if you will, certain amount of settlement risk, because it settles instantaneously rather than T+1, T+2, and so on and so forth. So you have that, when you place a sort of a request to convert your euro versus dollars, it will take some time to settle, right? And the stablecoin allows instantaneous settlement, so it reduces some risk even from banking perspective. It makes more sense.
So the risk, I mean, because I remember that T+1, T+2 in settlement. That what are the settlement risks? That it won't settle, but is it? I know one's instantaneous, but what's the risk there?
Yeah, the risk is that obviously in the settlement world, tricky, right? You have a trade between parties. So if we do a transaction together, I give you dollars, you give me euro. We have to, there's a time lag, right? Because you have to see the dollars, then you give me euro, and I do the same thing, right? So in this case, I will see the euro first, and then I give you dollars. So there's a chicken egg problem, right? So if you do have atomic swap on chain, on blockchain, it's very interesting to settle, instantaneously. But in the traditional world, if you go to a bank, you have to submit your dollars first, or I have to submit dollars to you first, and then to receive euro later, right? So that you could, that time could be 1 day or 2 days. And during that period, you could run away to somewhere like who knows, right? And that's the sort of a trust issue people try to solve through blockchain. That's a counterparty risk.
So, you're doing all this stuff from a traditional standpoint, and now you're fully locked in. What was the moment that convinced you that tokenized assets were inevitable?
One of the things that I always believe that like horses is so much more inferior than the steam engine, right? Steam engine is much more inferior than, like, now we have Tesla cars and so on and so forth. So world evolve from technology perspective much faster. So if you ever trade in in the banks, that 70 to 80% of time the trader will spend is actually operations, mid office and back office operation, reconciliation, and so on and so forth. So if there is technology can solve some of the inefficiencies in banks, in financial institutions, that would be very significant. So even from an end user perspective, from a trader perspective or banker perspective, I do think that tokenization or digitized stuff, either assets or paper or securities, will improve the operational efficiencies and minimize the risk for all parties around. So that's sort of where I feel this is very obvious to me. Because I do have the background sitting on the trading side in banks. I do feel the pain point, and then the technology, to me, again, obvious that can solve a certain amount of problem, a certain amount of issues we have today.
It was more so the realization of saying, okay, listen, here are some of the bottlenecks that we're facing in the traditional world. In leveraging this technology, it's solving those bottlenecks. So now you see that this will scale, into all aspects of banking.
Right, absolutely. Not only the banking world, but also consumer financing to a certain degree, right? Think about the MoneyGram, Union Pay, and so on and so forth. Those can all be resolved through tokenizing dollars, or i.e. stablecoin, to a certain degree, right? So there are a lot of pinpoints in the world that can really be alleviated through tokenization, through digitalization in general.
Got it. All right, you know what? Like, the goal was, all right, we spent some time just setting up that foundation, your background, and the whole concept of tokenized real world assets. Today's topic is really around that Bitcoin Treasury Company, and we want to really break that down and help people understand it. So before we get into that level, let's just do some some basic stuff, right? So I want to just give a definition. A treasury, in a corporation, the Treasury Department is the function responsible for managing the firm's financial resources, focusing on liquidity, funding, investments, and mitigating financial risk, right? A Treasury Reserve is a company's cash on hand managed by its Treasury Department to ensure daily liquidity, fund strategic investments, and provide a buffer against financial shortfalls. I want to give those basic definitions. Now, can you help us understand what is a Bitcoin Treasury Company?
So the Bitcoin Treasury Company, it's a very interesting combination of cryptocurrency and corporate finance. So you mentioned that the traditional function of a corporate treasury is really managing the balance sheet risk and so on and so forth, including inflation risk, right? They will go buy inflation protected notes and so on and so forth to hedge their balance sheet. In the Bitcoin treasury world, the motivation here is that they saw the fiat currency in general, including dollars, depreciate over time. But there's inflation and so on and so forth. Whereas Bitcoin as digital gold sustain that inflation risk effectively. So if you believe in a debasement world for fiat, so the Bitcoin is a natural place. Is Bitcoin digital gold or gold? So in this particular case, Bitcoin as digital gold is a sort of a denomination for their balance sheet. So this is again a way to protect the inflation or mitigate inflation risk on their balance sheet. That's the motivation very early on. So go back to the sort of short definition is that the Bitcoin Treasury companies are companies do not have a robust operating business. They are simply they're raising capital to capital markets, raising capital through equity, through convertible bonds, so on and so forth, to buy Bitcoin in this case and put on their balance sheet. And then in this way, they play the debasement trade, right? In this way, they can hedge their balance sheet, so that's sort of a top level definition of a Bitcoin Treasury company.
So I can understand this, right? Can any corporation that uses Bitcoin as part of their balance sheet be considered a Bitcoin Treasury company?
Yeah, so Bitcoin, or there are companies of that. So what I described to you just now is a pure play Bitcoin Treasury company. There's no robust operating business. In many cases, there will be no operating business except to just go out and buy Bitcoin and raising capital by Bitcoin. There's also operations or companies who has operating business itself. So for instance, MicroStrategy has a software company or software business. That's ongoing. They're doing a lot of AI work in the core operating business. But their Bitcoin Treasury dwarfs their operating business. So again, it's not a pure play, but they have operating business. Yet significant amount of their activities are associated with raising capital by Bitcoin. And then there's a third form of Bitcoin Treasury companies. Those are really, I would say, actively managing their balance sheet through various type of asset management tactics or strategies, right? So in a sense, they want to get more Bitcoin on top of Bitcoin through managing assets, just like a Bitcoin treasurer do, right? They want to, you have a dollar, like the world probably largest cash holder is actually Apple. Apple has a lot of cash on their balance sheet, dollar cash on the balance sheet. And they can deploy the dollars into new investments, or in the case of Bitcoin companies, they're going to use the Bitcoin to generate more Bitcoin. So that's more of an active management Bitcoin Treasury company. So there's a variety of forms of Bitcoin Treasury companies out there today.
So I'm just going to reiterate because I want to make sure I'm clear on this, right? So It's three types. The first type is a pure play Bitcoin Treasury Company, no operating business. So their business is literally buying Bitcoin, keeping it on their balance sheet, getting investors to support that mission and that drive, and they just
Right.
accumulate more and more Bitcoin. Pure corporate Bitcoin Treasury Company. Then you have others like MicroStrategies that have a core operating business outside of just stacking Bitcoin, and they're now using money from their balance sheet to buy Bitcoin, probably other things as well, but they have an operating business, which is, in microservices, in MicroStrategies case. And, MicroStrategies actually holds over 200,000 Bitcoins as of 2025. They say that they hold more Bitcoin than most countries' gold reserves. So that's just a stat I saw.
Yes. Amazing.
Now,
amazing.
right? So, you know how to stat. I love stats. Now, the third one, and I want to get clear on this, right? So that's the part that I don't understand as well, is you use Apple as a reference where they have a lot of cash on hand, right? And what differentiates them from the second, from like a MicroStrategies? That's what I want to understand.
Yeah. So in the case of MicroStrategy, again, their motivation is to go out and raise capital and buy Bitcoin, put on the balance sheet, do nothing with it. In the third version of it, now become more and more popular, is they go, the companies go out and raise capital, buy Bitcoin, and then they use the Bitcoin to generate more Bitcoin through investment activities, right? So just like if you hold dollars, you can invest in treasury bills, you can invest in XYZ to generate a little bit more return on dollar on your balance sheet. So in this case, think about the balance sheet denomination, not dollars, but just Bitcoin. So they're using Bitcoin to generate more Bitcoins, so that, let's say that their balance sheet is $100, and at the end of the year, their balance sheet may be 104, because the 100 Bitcoin, end of the year they have 104 Bitcoin. So the 4 Bitcoin is what they generate through investment activities through the year. So that's the active management versus the passive holding, like a MicroStrategy. So that's the sort of the difference here.
So in the case of the passive holding and the active, now I get a clear understanding, right?
Yeah.
But on the passive side, if Bitcoin's earlier this year times it was 70,000, now it's like 99,000 or 100,000. Even on the passive side, they are generating some income or generating more value just by holding it.
Correct. Yeah, that value can also go down because you're talking about the currency risk between Bitcoin and the US dollars, right? So what I'm talking about is think about your economy. Your world is a Bitcoin only. Forget about fiat. Forget about USD. Your balance sheet is only Bitcoin. So you want to generate more Bitcoin on top of Bitcoin. So that's more of active management rather than passive, because the Bitcoin as an asset does not generate any yield because it is a non-interest bearing product, right?
Okay, so the concept with the active is you're using Bitcoin to get more Bitcoin.
Absolutely, you got it. Yeah.
Okay. Why are companies choosing Bitcoin over traditional treasury assets like cash, T-bills, or corporate bonds?
They do indirectly invest in T-bills. So one of the things, one of the big movement in the cryptocurrency world is tokenizing treasury bills, tokenizing treasury money market funds, for instance. That's already done. So the biggest one is one of the biggest ones is UMint. That's UBS money market fund that's tokenized on chain. So there are alternatives ways for someone to take their Bitcoin and go on chain and deploy the Bitcoin to say UMint, UBS tokenized asset, and generate a little bit more yield, right? And then go back so another part of your question is why people choose Bitcoin versus other cryptocurrency asset. Is that fair?
No, I mean that's I can understand why Bitcoin, because it's the highest one. It's like the grandfather of everything. So
Right.
I can that, but really the question is, why even go in the direction of Bitcoin, right? Because obviously there's a volatility issue. Like why go there as opposed to just the traditional other ways to hold assets, whether it's bonds or just cash? Like why Bitcoin in this
Yeah,
area?
that's good. That's a great question. So I think let's go back to the debasement thesis, right? A lot of folks who get into cryptocurrency, including Michael Saylor, believes that fiat depreciates over time. So you can see that inflation is quite significant. In Rome time, there's also inflation there, right? So the inflation is prevalent in the fiat world. If you go back to history, like the gold and silver and so on, so those are hard assets. Has less inflation, more sustainable. So that's a rule of debasement thesis embedded in the sort of a Bitcoin treasury culture, if you will. So if you do not, so the premises here is that if you wanted to have solid asset, hedging against inflation, so gold is one asset, and there's a digital gold. Now the gold, it's interesting, obviously, but it's not digitalized. It's not synonymous, not portable, and so on and so forth, right? Bullion is very heavy. You can't really put in your duffel bag and move around. Whereas a Bitcoin is basically digital. There's as long as you have a cold storage, the password, the code, you can get access to it, right? So there are a lot of benefits holding a digital gold, i.e., Bitcoin versus the gold itself. So that's all. Again, it's a community where people believe that over a very long time, fiat will depreciate, which is true. Yeah, we saw that over the last 20, 30 years, right? Inflation has been a problem in recent years as well. So that's the thesis. Investing in Bitcoin rather than investing in bonds, fiat, all those fiat-based assets rather than Bitcoin, which has an embedded inflation hedge.
Okay, I understand that. That I could for people that believe in it in that community, I could totally understand that thesis.
Yeah.
Now, how would a company determine the percentage of BTC or Bitcoin to hold relative to their cash flow needs?
Yeah. So in the case of a DAT or digital asset treasury company, the first version where we talk about the pure play, because the pure play companies do not have any operations. So there's no capital expenditure investment in anything except go out and buy Bitcoin. So it's 100%, close to 100% of assets raised or dollar raised will go to Bitcoin. So that's hopefully that answers your question. But for the company who has a sort of operations, typically they're de minimis, right? So they're very small. The allocation is somewhere between 5% to 10% to the operating business. The remaining 90% will go out and buy Bitcoin.
So they'll use 10% to and that's the case of the passive one. The passive 10% for the operating business, and the 90% will be deployed to Bitcoin.
Yeah. So basically, let's say you run a software company, just like in the case of MicroStrategy. So assuming that I don't know if this is true, or if that line of the business is not profitable, so they could pull some of the money from a dollar raised to buy Bitcoin into investments for a software company, for the software business, right? So that's again 5 to 10%, depending on the company's director's appetite.
That's a massive percentage. Like I don't know. I was expecting the number I was expecting you to say when in looking at this was like maybe 80-20, but like 20% towards Bitcoin, 80% towards other things. So having that reversed, I wasn't expecting that answer, to be honest with you.
Yeah. Again, like all those folks who are focusing on building a Bitcoin treasury company, right, rather than dollar treasury company. So they wanted to raise capital and buy Bitcoin. So again, I appreciate the fact that Bitcoin to dollars is volatile at point and certain times. So they suffer risk, right? So you can see in the recent Bitcoin drawdown, a lot of companies not doing too well. So their stock price reflect that as well, right? So there's definitely market understand there's a volatility, for those type of Bitcoin treasury companies out there.
But that brings down to a fundamental question, because a lot of people that I talk to, some people that I talk to are totally skeptical of Bitcoin. Wish they were in the comments, because this will make for great questions they would ask. If you're not thinking about it from the perspective of tying it back to a dollar amount, right? Because let's say it's $100,000, right? Let's say hypothetically I have $100,000 to I want to safeguard because of inflation risk and so forth. So I take that $100,000 cash, I buy Bitcoin, right? It's hard not to think of that if Bitcoin is in 3 months, it's 70,000. It's hard not to think that, wow, the 100,000 I had is now that I put to Bitcoin is now it's the worth of it is 70,000. What's the position to reframe that thought? Like, how do you not think in that way, at least from a retail perspective, right?
Yeah. I think that's the differentiation between, like, if you want to in the long run versus short term gain, right? So if you are really believing the world has a lot of inflation risk, right? If you're in Argentina, your inflation could be 1,000%, right? But in the US, because we manage the inflation risk and so on and so forth, it's not 1,000%, obviously. So you don't feel that, at least not immediately, right? So I think in the long run, you do pretty, another thing I'm thinking about now is, okay, why people invest in real estate? So the real estate asset in the US is the largest, right, asset class because of the inflation hedge, right? Because people really believe there's an inflation risk in there. But then take that one step further to say, what is the alternative asset, being gold or state digital gold, that I can get more protection on my inflation, to my inflation risk, to my assets, because of everything that we do altogether is really dollar based, right? So we are overexposed. We have overexposure to dollars, right? Zero exposure to anything other than dollars, right? So that's the risk, right? So if you think about that way, you don't really care about the day-to-day volatility of the asset itself, right? But obviously, like, this is not an investment advice. People need to understand their own, like, pinpoint, right? If someone cannot, you need this is more personal choice, if you will. Bitcoin is more like 30 to 40% volatility asset, but there's other more volatile assets out there in biotechnology stock, in Tesla, and so on and so forth, right? So that's more of an investment question, to personal investment question. But I can appreciate the fact that you do have significant volatility, but that volatility isn't unique to Bitcoin, right? That's in equity market, that's in foreign exchange market, and that's in even in bonds, in real estate. Like in 2008, real estate market went down 40-30%. In many areas 60%, right? So you do have that price risk. But again, going back to the thesis, going a fundamental basis that we have. If you believe there's inflation, and then you want to play the debasement trade on the currency, maybe Bitcoin is the right way to look at it, right? It's a right asset class. You can also invest in real estate, right? So
I believe in diversification. I'm personally heavier into real estate, but in terms of looking at it from the thought process of inflation risk, I get it, right? Like certain countries, you're taking barrels of that currency to buy bread, right? So it's we don't necessarily have that thought in mind here in the US when you're dealing with dollars. I mean, it's 2025. In the 70s, my mom and my older sister can tell stories of how they could take $1 and go to a store and buy the whole world.
True. That's true. That's true.
We see inflation in the risk in decades, where other countries, it could be a government issue, could be different things. It's less time than that, right? It can and it is more pronounced than that, right?
Absolutely.
Which
Absolutely.
is literally you need so much of the currency. So when looking at it like from that perspective, right? And then if they were to take their money earlier on and put in Bitcoin, it protects their currency from volatile government structures and just various different things.
Yeah.
So I could definitely appreciate that in looking at it from that perspective, as you just mentioned, because you have different people talking about like, oh, buy Bitcoin, but looking at it from an inflationary risk to fiat. When we say fiat, people, we just mean regular money. That's another a name for it. So can totally understand that. So I think now the audience should have a basic understanding of the treasury, a Bitcoin Treasury Company, and so forth, and the various flavors of that. In what you do at Change Securities, right? What's your mission in this evolving ecosystem of digital finance?
Yeah, I think that the core mission is really like, I think education is very important. Having the dialogue, this type of dialogue is very helpful for having different perspective. Look at the problem we have. Really, like if you think about how the fintech evolve, they have the company goes from like a pre-seed to seed, then to Series A, blah blah blah. You see a lot more companies over last 11, 10 years, in the cryptocurrency world or blockchain world, getting into more mature. So there, obviously this year we have the Circle IPO, we have the Gemini IPO, we got Bullish, and so on and so forth. And you see, there's a convergence of capital market into the Bitcoin and cryptocurrency world. So the Change Security or Change Digital Holdings has a mission of bridging the two worlds. I think that's quite important. Because at the end of the day, the digital cryptocurrency world cannot just live by itself. It has to go to the mainstream, right? And one of the ways to get into the mainstream is going to the corporate financing world, right? Become a DAT company. That's one example. Go to IPO and so on and so forth, right? And there's also very active M&A, merger acquisition activities out there associated with blockchain companies, for instance, like Stripe, or someone bought Bridge, and Bridge is a payment Bitcoin blockchain payment company. So there are a lot of convergence between the two two worlds, the cryptocurrency or blockchain world and the traditional world, right? So this is what we value because I grew up traditional as well as in blockchain.
Okay, so like what you just said was like the mission basically is to sit between those two worlds of traditional finance and where the corporates are now moving, leveraging things like Bitcoin on their balance sheet and being the in between of those two worlds. Is that?
Yeah, not only Bitcoin but generally cryptocurrency assets or blockchain, right? So blockchain doesn't have to have a currency to be a blockchain, right? So it could be basically a blockchain use case for, I don't know, like a land lease, right? Mortgage, right? So that's those type of things. It could be very, very interesting. Like Figure got an IPO this year as well. They were focusing on tokenizing effect or putting mortgages on blockchain, right? They're actually largest mortgage players in the blockchain world. Yeah.
Can you explain to us how does that actually work, right? You have a company that putting mortgages on the blockchain and tokenizing it. How does that process work?
Yeah, it's pretty complicated. I haven't refreshed my memory on this one. But in general, it's a asset tokenization. So you tokenize the mortgage trade line itself. So also you can go to the land lease. The property record is free. It's by county, right? That can be printed or through provenance. It can be printed on a blockchain. So that gives you finality, composability, and so on and so forth. That's all the characteristics associated with a blockchain. and that blockchain of information can go to mortgage companies, right? And then it's really a sort of a data efficiency play, operation efficiency play. Allows folks to take a 3,000 mortgages, line of mortgages, and putting a securitization trust, right? That's sort of things that people are doing already. On the process, I'm pretty sure is fairly complicated. It's well structured, but in general, it's basically going from the land record to the mortgage application itself and documentation. So if you ever close real estate transactions, there's like a stack of paper this high. Those are basically block-based but documentation, right? Everything is print, and because blockchain itself is immutable, you avoid mistakes to a certain degree, and then you improve the operational efficiencies for mortgage applications, and then securitization to the end. So if you want to securitize, you remember in 2008, there's a lot of falsified documents, right? So if we put some of the materials on blockchain, which become immutable information, and that avoids some of the mortgage fraud. So that's sort of the thesis people are applying in blockchain.
And just for the audience, when they say immutable, meaning once you put it on the blockchain, you cannot go and alter it. It's not like a database where you hack into it and then you start changing values. You mentioned like pulling them together. Is that similar to? So we look at the traditional world in 2008 when we have mortgage-backed securities, right? When you're taking a whole bunch of mortgages and you're securitizing that. Would that be a similar analogy?
Yeah, exactly. That's what. So you can actually pull a blockchain based loan documentation into a securitization trust. In fact, Figure has done a bunch of them already. I don't know how many billions, but that's been around for the last 7 years. So again, like the technology becoming more and more efficient, much better. I think the digital world is much better than the analog, right? So I think that's why I believe in tokenization in general. And I think that to a certain degree, all the stock, all the stuff we see in today's world will have a tokenized form, right? So it's quite amazing. Yeah, I'm very, very impressed how the industry evolved over the last 7 years.
Interesting. And then I want to get into the funding of the treasury, right? Some of the Bitcoin Treasury companies use instruments like convertible bonds or preferred stock to fund their Bitcoin purchases. Why are these tools commonly used?
Yeah, so it's more from an investor's perspective, right? So if you are sitting in a hedge fund or asset manager's seat, you want an interesting asset to play. So one of the things that I don't know if you know, the convertible bond market is pretty boring, quote unquote, there in US. So most of the convertible bond folks are looking at very traditional, like IBM CBs or blah blah. Those they don't really move much, right? So one of the things that for hedge fund managers, to make money is that they need volatility, meaning that the asset has to move up and move up and down, right? So the higher the volatility, the higher the chance they're going to make money or lose money for that. If they're good, then they will make money. But if the asset doesn't move, then there's no way they make money, right? So that's sort of the analogy there. One of the genius behind Michael Saylor and MicroStrategy is take that volatility appetite from the Bitcoin world. Like Bitcoin used to be 60% volatility asset, now it's 40% volatility asset, 35. So that asset itself is very volatile. But putting Bitcoin into a convertible bond makes the convertible bond even more volatile, right? So if you what is a convertible bond? Let's go back a little bit. Convertible bond is has, let's decompose that a little bit. Has a risk associated with the equity, the stock, has a risk associated with the corporate credit, right? The credit risk has a risk around the volatility, right? Because this convertible bond has equity component to it, right? So there's equity volatility associated with that as well. and the interest has some interest rate risk, right? So if you look at some of the cases out there, like CB world, convertible bond world, there's no interest paid, so the interest rate on the convertible bond is typically 0. Then it step up after a couple of years or few years, and then the equity, the stock itself, underlying stock, is pretty volatile, right? So if you look at the MicroStrategy's volatility, it's much higher than 30%, 40%, right? So if you think about it, okay, if you hold 100% of the Bitcoin on their balance sheet, right, and that their balance sheet risk should be just the volatility should be just the volatility of the Bitcoin, but that's not true, right? The volatility is typically 2 times, 3 times, 4 times more than the base asset, if you will. So by issuing convertible bonds allows investors, especially arbitragers, to come in to do what? To short the stock, right? Through options or simply borrow, right? So to hedge out the sort of the equity risk, right? And then they trade around the stock so that they can monetize the volatility because the convertible bond its price is cheaper in terms of volatility, cheaper than the stock itself, right? So that's how CB becomes very popular. There are a lot of convertible bonds arbitragers or investors out there and get into Bitcoin Treasury companies because now they realize, okay, the CB is it has an asymmetric payoff, meaning that if the Bitcoin company goes up, they monetize the volatility through trading the stock. If the Bitcoin company, as long as it doesn't default, right? As long as it doesn't default, there's no default risk is very hard to hedge. Then they can actually again trade the underlying stock and monetize the gamma. So there's a technical term called gamma. Basically means that they monetize the volatility through trading around the hedge ratios between the convertible bond and the equity themselves. So that's the sort of long run of the answer to your question.
Can you repeat that term, please?
That's called gamma. Yeah.
I got it. So because we're going almost at time, so I want to just start like making sure everyone kind of keeps with this understanding. So how do you feel that this treasury management with the Bitcoin, how does it differ? How does treasury management differ in bull markets versus bear markets, leveraging this Bitcoin strategy?
Yeah. So like I mentioned earlier, in theory it should mirror the underlying base asset, i.e. the Bitcoin in terms of volatility, right? So the Bitcoin volatility is 30%, 40%, 50%, whatever the percent is. The company, the stock should roughly about the same, but that's not true. This is because you have company specific risk, right? You have the liquidity risk that's different from the Bitcoin, right? Bitcoin is a very liquid asset. It trades in billions a day. Maybe the company trades only 2 million shares a day, right? So you have that liquidity risk. So they're not in parallel. They're not there's no one-to-one mapping there. In the bear market, you typically see the Bitcoin digital asset treasury companies went down significantly. So in the case of MicroStrategy, actually, it actually went down 50% of the base asset, meaning that if they hold $1 of Bitcoin, their stock price is 50 cents, right? So that's the one case. Now, when in the upside market, because the upside market, the volatility is in their favor, they actually appreciate a lot more. So holding a dollar of Bitcoin on their balance sheet may realize $3 of value on their stock, right? So that's it's actually a levered. If you think about it, it's a levered ETF type of thing, right? So the lever to play on the base asset, i.e. Bitcoin. So you can if the company goes default, then that's different. That's completely different risk, right? But if you want to play that range of volatility, investors have to understand it's quite volatile asset, right? So if you're not comfortable with the Bitcoin, base asset because of volatility, you shouldn't be comfortable with DAT companies invest. So you think about that way, right? So there's definitely a lot of risk out there. Yeah.
There's some terms that I heard that I want you to help us with. Bitcoin per share and Bitcoin return rate. So BPS and BRR. What do they measure?
Yeah, BPS is basically like, okay, what's the intrinsic value of the Bitcoin native enterprise, right? So basically Bitcoin per share. So measures how many Bitcoins, how many Bitcoin the company holds per share of their equity. So this is basically intrinsic value, if you will, right? So they're like fundamental value, intrinsic value. Like Bitcoin return rates, it basically, is, like I mentioned earlier, if you have a hold of 100 Bitcoin, January, by December 31st, you have 104 Bitcoin through your investment activities. That's the Bitcoin return rate, if you want.
Got it.
So that's So think about it. That's more like a return on equity, or EBITDA, right? Return on EBITDA, if you will, in the traditional world. Yeah.
And to start bringing it down, if a CFO is watching this, what is the simplest way they could explain these new metrics to a board?
That's a great question. I think the board has to convince themselves that they live in a Bitcoin world rather than a dollar world first. So I think that's most important. So if you have that perspective, then everything will become more natural, if you will. Right.
Okay. All right. That's interesting. What should investors look for when evaluating Bitcoin Treasury companies or tokenized asset platforms?
Yeah, those are two separate questions. I think the Bitcoin Treasury companies or DAT in general, it's a risky investment. I mentioned earlier. So the investor has to feel comfortable, understand the risk, upside risk, downside risk, right? Associated with that. But also, the brand is very important, right? If you think about, there are about 230, digital treasury companies out there. Only few actually doing quite well or sustain more stable. So you now understand the team behind it. That's very important, right? Number one. Number two, the assets they're involved in, right? Assuming Bitcoin, right? That's one asset. That's sort of default classic asset for DAT company. But there are other DATs involving like Solana, Ethereum, and so on and so forth, right? So you must have to understand and comfortable with the base asset. That's very important, right? And then the volatility associated with the stock, okay, i.e. the liquidity. The most important thing is the liquidity, right? So one of the things that I mentioned earlier, a lot of DAT companies do not have operating business, right? Then the question is, are they putting a liquid asset into stock that doesn't trade, or they're putting liquid asset like Bitcoin into a good brand, which a stock has a liquidity like MicroStrategy, right? So there are a completely different risk profile, right? So I think the investor has to understand the liquidity risk associated with this type of companies, right? On the platform side, I think there are a lot of tokenization platforms out there. I think a TokenMe in Europe, they're acquired by Apex. That's very well run, a very good brand. There are a few other guys out there. People can look at it. So like Franklin Templeton, they have their own tokenized fund, money market fund. Again, it's a good brand. So investors need to look at the brand itself, and then if they're reputable, what's their background in traditional world, right? So if you're Franklin Templeton, they've been running traditional world for many decades, right? And they're basically leading asset managers out there. BlackRock is the same thing, right? But if someone they're not we are not familiar with this, we need to do more diligence. We need to understand what they're actually doing, right, in terms of managing the asset themselves. Yeah, so again, investor due diligence is very important, and then again, appreciate the risk, understand the risk is super important in this world. Yeah.
The last question, because we're at time. What is your boldest prediction for the intersection of corporate treasuries and crypto over the next decade?
Well, I think it's not a prediction. I think the crypto digital treasury companies will exist, but in what format I do not know. Again, we're still learning. The industry is new. We're still learning the investor appetite and how we structure the deal such that it will be investor friendly, corporate issuer friendly, and so on and so forth. There's a lot of trial and error in this right now. But we can tell you today that a lot of DAT companies are not, having issues, right? Because they're not structured correctly, or their base assets are pretty volatile. Their stock is not trading well, and so on and so forth. So a lot of it, again, it's a work in progress. But next 10 years, DAT will be around, right? And then people will see DAT as a vehicle to get into alternative vehicle to get into Bitcoin, to get into Solana, Ethereum, and so on and so forth. Right?
And you said DAT. What's that stand for?
Digital asset treasury.
Got
companies. It. Yeah, DATs. Yeah.
Wilfred, this has been a great conversation. We have never talked about Bitcoin Treasury companies and how it works, so I definitely appreciate your insight and expertise on it. I'm sure the audience does as well. What we do at the end of our show, I'm going to get off the stage and I'm going to give you a couple of minutes to talk about your company, how people can find you and stay in touch with you.
Yeah, thank you very much. I appreciate it. Great to be here. We have a public traded company. You can look us up. The ticker is CD. It's for Chain's digital holding, right? We also have a broker dealer. That's Chain's Securities LLC. If you have any questions, I love to go out and then talk more. Getting more education, if you will, right? On the new world of cryptocurrency and digital assets. Thank you for you guys all being here. Bye-bye.
Guys, thank you for your time today. We have the website Change Digital. It should be on our screen, should be part of the show. Right now, we left it there. Next, you can also subscribe to our weekly free newsletter at techbehindfintech.com/subscribe. I'm going to put that on the list for you guys on our screen. This way you'll have access to our upcoming guests and also fintech news all for free. So go to the website, subscribe, really easy submission. Next, this show is sponsored by Sweating Equity. So that's our next show. Tech Behind FinTech, we talk about a topic, we get into it. Sweating Equity is more about the guests while we are training with them in a gym MMA setting. So it should be interesting and fun. So stay tuned for that dropping in 2026. As always, like I always say, whether you're watching the show live today, whether you watch it tomorrow, or whether you watch it next year, thank you very much for your viewership. It means a lot. Thank you for the messages, the DMs, and the comments. We've been at this for since 2020, and we appreciate your support. Other than that, Wilfred, thank you for your time today and your expertise. Greatly appreciated. You have a wonderful weekend.
You too. Bye-bye.
All right, cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.